Okay, so let's begin. So, hello everyone. Welcome to today's session, Breaking the £100,000 Tax Trap. So, we're going to do some smart tax planning for women professionals. I'm Selina Flavius. I'm a money mentor at Women's Wealth, and today I'm joined by my colleague Yuliya. So, please feel free to say hi in the chat, introduce yourself. Do feel free to come off mute. We like these sessions to be nice and interactive, and hopefully we can answer some of the questions that you have. I'm so glad you're here because this is a topic that often flies under the radar until it's too late. So many successful women hit six figures, celebrate the milestone, and then discover that their tax bill feels far heavier than expected. And by the end of this session, I want you to take away and understand, what the £100,000 tax trap is, why it matters, especially for women, and most importantly, how to plan so that you keep more of what you earn. So I'm going to hand over to my colleague Yuliya now.
Thank you, Selina. And hi, everyone. My name is Yuliya, and I'm also a money mentor at Women's Wealth. And Financial Friday is a Women's Wealth broadcast where we spend half an hour just talking through some of the latest information and views around topics that matter to our members the most. So today's topic, as Selina said, is earnings of £100,000 and a 60% tax trap. And we would like to engage with you today and just put an answer to the question. Put number one, if you, in the chat box, if you are already earning £100,000 and are keen to learn how about the tax implications and how best to manage this, or put number two in the chat if you are about to reach that threshold. Thank you.
Yeah. So we wanted to just, oh, thank you, Laura, for putting number one in the chat. So we are really keen to understand where everybody sits. So if you are already earning £100,000, put a number one in the chat. And if you are close to it, maybe you are in the middle of salary negotiations, maybe you are having a really successful year in business and you know that you're going to reach that very, very soon. So that six-figure mark very, very soon. Do let us know. Do put it in the chat. We'll read out some of the comments that we've got. So we've got someone that's put a number one and someone that's put a number two. So someone who's already there, someone who is almost there. And then also, and we've got the chat, Jenny, thank you for your comment. Or at least that's my determination that I declare today. We love that. Yes, absolutely. So we are, that's the determination that we're going to go for today. And absolutely, why not? So, like I mentioned, I want to just have a brief high-level overview of what the £100,000 tax trap is and also why it's so important, especially for women. So let's start with the basics. So you're probably all aware that in the UK, everyone gets a tax-free personal allowance. And it's been the same for a number of years. But if you don't know, for the tax year 2025 and 2026, so the tax year that we are currently in, it works out at £12,570. And that's the amount that is our personal allowance. And that's the amount that we actually are able to keep of our income before we actually start paying taxes at whatever marginal tax rate that you are at. So we do have the basics tax rate, which is 20%, and then the higher tax rate, which is 40%, and then also the additional tax rate, which is 45%. So before we start paying tax, we have that £12,000 570, which we actually get to keep. But the catch is that once you start earning over £100,000, you start to lose some of that personal allowance. And it's worked out that for every £2 that you earn over £100,000, you lose £1 of that allowance. So that means that by the time your income reaches £125,140, you've lost the allowance completely. So effectively, between the £100,000 and the £125,000 income mark, you're paying an eye-watering 60% tax rate on part of your income. So in reality, you are only keeping 40p of every £1 you earn in that band. And I do have a bit of a graphic to share with you. I'm just going to share it so it kind of illustrates it. So this is how it effectively works. So between 95 to 100, you're paying 40% tax, as you get between 60 to 125, it's 60%. And then it seems pretty unfair when you get to above that, so 130%, and then it drops down to 45%. So this is just a visual illustration of what it looks like. So the effective tax rate by income as you get between 100,000 and 125,000. So I'm just going to stop sharing that, but that's what it kind of looks like and feels like. And so why does it matter for women? So it's really important for everyone, but especially for women. And here is why. Number one, career progression. So many women are now moving into senior roles, negotiating a salary increase, and you could unintentionally drop yourself right into that tax trap without necessarily kind of thinking about it or realizing it. If you're also an entrepreneur, and we haven't asked in the chat, do let us know if you are, salaried, or if you are salaried plus entrepreneur or entrepreneur entirely. But female business owners, you may be extracting money from your businesses. So you may be taking salary plus dividends, and you might be putting yourself into that tax bracket where you are losing that personal allowance without kind of necessarily realizing it. Also, there's an impact on kind of childcare as well. So, family and wealth planning. So, if you have children, and again, we haven't asked if you have children, do let us know in the chat. If you have children and you pass the £100,000 mark, you can also lose some benefits that come that kind of drop off when you get to that £100,000 mark. So you do start to lose tax-free childcare. You're no longer entitled to that, which is really important. Some of our clients have children. And then also the gender wealth gap. Because women often face career breaks or part-time work, maximizing your financial efficiency during high earning years is even more critical. So at the time when you are earning the most, how can you manage that effectively to see if you can regain some of your personal allowance, but also put money away for your pension, for your future, at the time when you're being paid the most is kind of the things that we're talking about today. So I'm going to hand back over to Yuliya, who's going to give some examples or an example scenario.
Thank you, Selina. And quite recent client question we have had. Someone was earning £99,000 and demonstrated exceptional performance, and there was a bonus and a pay rise coming up. And the individual was also benefiting from a tax-free childcare, which was 30 hours a week. So the question to the audience now we have is, would you, one, if you were in this situation, would you decline the bonus and the pay rise? Two, would you accept the pay rise and the bonus? And C, would you seek professional financial planner and advisor help?
So do
Looking
let
for you.
us know in the chat. So the scenario is someone is earning £99,000. They're due to have a conversation about bonuses and pay rises. And what would you do? Would you A, decline the bonus and pay rise because you know the knock-on impact? B, would you accept it and maybe not necessarily worry about the bonus and the impact? Or would you C, get some advice? Jenny, we see, yeah, you will put in C. And Jenny, you just put it in all in additional pension. I did B, but obviously should have done C. Rebecca, yes. We are big fans of C because although, it can seem like there's a kind of downside, doing some planning, doing some preparation, looking at the numbers, doing some cash flow kind of planning is really, really important. And that's what we have done with our clients who have found themselves in the scenario, whether coming up to the scenario or already in the scenario. So if you are already, have taken the approach of B, so taken the bonus and taken the pay rise, or if you've done A and decided to decline it, it's never too late to, create a new plan. And, our diaries are always open for you to come and speak to us and create a plan. But I love it. Yes, I'm glad that we're taking the bonuses and pay rises and we can create a plan still with it. So some strategies. Oh, sorry, go on, Yuliya, were you going
Yeah,
to say?
Celine, I was just gonna say, would you mind sharing some of the strategies or solutions that can be exercised to benefit from the tax saving?
Yeah. Yeah,
Yeah.
absolutely. And someone's already mentioned the strategy in the chat as well. So doing a pensions contribution and pensions planning and pension contribution, it's, the most powerful tool that we have. So contributing to your pension, so taking any bonus if you can. And it's also important to speak to HR because we do have clients who, sometimes, you're not allowed to pay your bonus into your into salary sacrifice your bonus. So having a conversation and being really strategic about what you can and can't do, what's permissible within your workplace is key. But doing a pension contribution, it reduces your taxable income and it helps you hopefully to reclaim some of that personal allowance that I mentioned earlier, whilst also building long-term security. And again, I mentioned the fact that sometimes women retire with smaller pension pots. So it's really quite important to use the tool to do both of those things. Another option is gift aid donations. So charitable giving, it's not just being generous, it can be tax efficient as well. And some workplaces allow you to give to charity automatically. And again, it will extend your personal allowance. You've also got things such as salary sacrifice schemes, so swapping cash salary for benefits like pensions, so doing, putting money more into pensions, you know, uh, swapping salary for things like childcare, for electric car schemes, again, will lower your taxable income, so that the kind of take-home pay that you have. Also, again, thinking about it, if you're running a business, taking and planning carefully when to take out dividends and bonus payments as well is key. And then also just overall thinking about planning. So, for example, if a bonus pushes you over the 100K line, seeing if you can spread it over 2 years instead are just some tips. So, Yulia, I know you're going to expand on some of the tips as well.
Yes, thank you, Selina. I just wanted to add to salary sacrifice scheme. So, if what effectively means you sacrifice your salary and you benefit from the saving. And as Selina mentioned, there's additional pension contributions. It can be childcare vouchers, it can be cycle to scheme, or even extra annual leave. So all of these savings will allow you to bring your adjusted net income below £100,000. And on dividend bonus planning as well, if you're in a situation where you can spread, or you can choose when you would like to take the bonus, for example, £20,000 in March or £20,000 in April, that can make a huge difference to your overall bill. And summarize as well, just to how to achieve the max effect of that is combination of all of these options. And again, I would like to bring an example of someone is earning £105,000 and makes £5,000 pension contribution, £3,000 gift aid, and £2,000 in the childcare. So that means that adjusted net income is £95,000, and you gain back your full tax-free personal allowance, and your effective tax rate, your higher tax rate you're paying is 40%. Selena, is there anything else you would like to add to those?
Yeah, and I know we've got some questions which we'll come to in the chat. I think the message is that yes, you've got to £100,000 and it doesn't have to feel like a dead end. It's just a signal to do some really clever financial planning, as we've discussed. If you think about it this way, you've worked really hard, you've earned these bonuses, these salaries, these pay rises. Unfortunately, the government has set the rules, we can't change them, but we can decide how to play the game. So it does mean, doing things like negotiating your total reward package, not just your salary, building pensions early, which is especially important for women who often retire with smaller pension pots, and then also, seeking advice proactively, not reactively, when your income approaches six figures. I just want to go to some of the comments that we've had in the chat. So ones that are specific, and also we're going to encourage you to come off kind of mute and ask some questions as well. I know, Alice, you said you're interested in the childcare side of this. So, the government has child-free tax care available. If you go onto the website, you will see that you have to have an adjusted net income of below £100,000. And one of the scenarios where I've helped one of my clients plan this, and it's a client who is salaried, so she gets income from from work, being an employee. Also, she owns a rental property, so also that tops up her income, plus bonuses as well. And she's been pretty consistent getting bonuses over the last few years. So leading into this new financial tax year, we knew that we had to do some planning with her to get her under get her under the £100,000 income bracket, adjusted net income bracket. So what we were able to do was get her to effectively kind of maximize pension contributions. So do salary sacrifice of pension contributions to bring her income down. And that meant that she was able to access, child-free, tax-free childcare. So get, some of the burden of childcare costs, which we know are very expensive in the UK, down in order to benefit that way. But also she gains back her personal allowance as well. And also that money that she is sacrificing to pension is really building up her pension pot, uh, probably to a higher level than she had kind of thought was possible before. And we did it through, looking at cash flow, something called cash flow planning, which is what we do. So we look at our clients' income, how much they need to pay essential bills, lifestyle bills, discretionary bills, and just making sure it was all very affordable, and that she's gaining back that personal allowance. Plus, also we can see and do cash flow planning about how her pension pot will grow in comparison to what she was doing before. So that's just a real life example when it comes to the impact of childcare. And I have got clients as well who, again, I've got a client who is, a doctor, and at one stage she was able to claim child-free tax-free childcare. Sorry, I keep saying it the wrong way. But then she's now reached £100,000, and she doesn't qualify for it, and we have to do some planning to get her under that. So that's very specific about tax-free childcare. Rebecca, you asked, were the clients able to then discuss this with company and negotiate a different strategy? So yes, so she has been able to speak to HR, been able to understand, okay, what can I salary sacrifice? What is available? The client wasn't able to sacrifice bonus. That wasn't something that is done at the business. So again, each business will be on a kind of case by case basis. Not every workplace will offer the schemes that you can sacrifice to get. So I think it's just really important to have a conversation. And it's also important to recognize from an employer's point of view, and again, if you're a business owner, if they are, doing, adding more to your pension on your behalf, for a company, it is a reduction. They get a reduction in is it capital gains tax? I think it is that they pay. So it makes sense for the business to do. It's not capital gains tax. What,
National insurance contributions.
corporation tax. Is it corporation tax? That's what I meant to say. They get a discount on corporation tax based on the pension contributions that they put in on your behalf. So uh, in our experience, employers do like to do this. They do encourage this. So again, just having a conversation with your workplace just to understand, what is available is key. Um, Laura, you've asked, can I ask how you manage this situation if the bonus pay rise comes at the end of the financial year? So again, it may be having a conversation with HR and just seeing if that bonus can come, at the start of a new financial year. Um, so I think it's just having these conversations. Yuliya, I don't know if you want to add. I'm just looking at the questions and kind of answering them there.
No, I agree with you. It's just having understanding what it can potentially be paid, and as long as it is flexible, then we can discuss whether it can be paid in the next tax year. And then there may be change of circumstances where the tax rate is changing. So yeah, as long as there is a flexibility, absolutely, I would agree with Selina.
Yeah, and Geraldine, you've asked a question. Can you mention whether we can make a retrospective additional pension contribution where we have missed the planning opportunity for the past year, please? So you can contribute to a pension if you haven't. So when it comes to pension, there's an allowance amount of £60,000. That's dependent. That's if you're not a higher rate, really high income, so 260,000 plus, which then your pension allowance may be lowered. But typically, we have £60,000 that we can pay into pension each year, and you can do something called carry forward um, for 3 years. Um, we can do something like that as well. So there are things that we can do, and these kind of questions are really, really super important, and that's where we do all the planning of individual circumstances for our clients. What did I want to finish? So, I just wanted to just wrap up. Actually, Yulia, you were going to do a bit of a summary, weren't you, before we wrap up?
Well, yeah, I just wanted to say is that like a checklist really. Know your adjusted net income. Make sure check your personal tax-free allowance when you think it's going to be affected. Make use of the gift aid and then salary sacrifice schemes as well. And yeah, and if you've exercised all these options and you're still not sure, then get in touch with us and we will be able and happy to help answer your questions. We offer 15-minute free discovery call, and yeah, we will be happy to get to know your situation better and discuss that.
Yeah, feel free if you haven't already had a conversation with us, do book in. I think Yulia's going to share some links for you, so you can book in and get a free 15 minute discovery call meeting with us. And it's final thing to say before we wrap up is that the tax trap doesn't have to be a trap. It doesn't need to hold you back. With pensions, planning, and smart structuring, you can take control. And remember, every pound saved in tax is a pound that can be invested in you, your family, and your future. Um, Thank you for joining Yulia and myself today. We hope you have found the session useful. You can join Women's Wealth for free by signing up to our Enable membership today and gaining access to carefully curated content. We have courses on how to invest, resources to help you manage money and create a fabulous financial future for yourself. We are authorized and regulated independent financial planners. And for those who need more of a one-to-one service, you can upgrade your membership to suit. So whether it's budgeting, investing, or planning for the future, we're here to give you our expert advice. Thank you so much for joining us today, and we hope to see you at our next event. Thank you so much. Thanks so much for your questions, everyone.
Thank you, everyone.